Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all our viewers from the U.S., Korea, and around the world. We are coming to you live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and we are coming to you live from the financial capital of America in New York City. Joining me for this morning's market briefing is Tai Wong, independent proprietary trader. And of course, joining me later for the Market Insight is visiting Professor Namu Ri of Yonsei University. Good morning, Tai. Thank you so much for joining me on this Monday.
It's good to be here. It was a great weekend. Lovely morning once again.
And here we are about to head into a very busy week when it comes to economic data as well as central banks. And of course, here on Wall Street, all eyes are on the Fed Reserve. They kick off their two-day meeting tomorrow, the rate decision expected on Wednesday afternoon. So what are your expectations as we head into this very busy week?
It's very unusual for you to go into a Fed meeting in a non-crisis period where it's a coin flip. And essentially, it's a coin flip. And we talked about this last week. The market was probably 85, 15, 90, 10, that the Fed was going to go 25 and be safe about it. And then on Thursday afternoon, this Nick Timiraos article from the Wall Street Journal comes out and really turns it on his head. Again, the market thinks that he's the Fed whisperer, or rather the Fed whisperee, I think is the better way to say it, that the Fed wants to send messages through him. And it was a very dovish article. He talked to a number of former Fed regional presidents, including Esther George, who was a hawk, and they all said 50 is the right way to go, or we wouldn't fight it. And the market really, in the day and a half through Friday, completely turned it around. As a matter of fact, I think we closed on Friday 65% of the market, based on the CME FedWatch tool futures, was saying 50 basis points instead of 25. That's a huge change, the biggest change I've ever seen, based on, as a practical matter, one newspaper article. So, Nick, this is Nick's time to shine, and he's going to be amazing, and I hope he asks for a raise if this really works. But we don't know. I think Bill Dudley, the respected former New York Fed president and of Goldman Sachs, said he's been pushing 50 for a long time. He wrote another piece that 50 is the right way to go. I've always said 25. I think I'm gonna stick with 25 because I think that gives the Fed the most optionality. You do 25, you can give a dovish directive, the market moves along, and is pretty happy. If you go 50 though, the market's going to think, well, you're going to go 50 now, and you're going to go 50 in November, and you're going to go 50 in December. So you ratchet up expectations dramatically. The Fed is going to want to say, the market is going to want to say, well, the Fed's going to go down as quickly as it went up. And I don't think the Fed wants that. So I think 25 with a dovish directive is actually better. But we'll find out. We'll find out in a little more than 48 hours.
And Tai, as you mentioned, many are weighing whether or not we'll get a 25 versus a 50 basis point rate cut. But of course, heading into this year, we've talked about this on the show many times before. There are expectations for the Federal Reserve to finally begin cutting rates. And some people say because that central bank is already on its rate cut trajectory once this meeting happens, does it really matter whether we get a 25 basis point cut or 50, given that they will continue to cut rates?
It matters because the market, it drives market expectations. If you do 50 now, the market's going to want another 50 beyond that. There are a lot of folks who are low interest folks. So, presidential candidate Donald Trump certainly is one of them. He's always wanted lower rates. He's a real estate guy. They always want lower rates. So you're going to get a lot of push, or the Fed's going to get a lot of push for more and more 50s if they start with 50. So I think it's a coin flip. I'm going to go with 25. And I think tomorrow we're going to do a little bit more of a deep dive into expectations in the dot plot and growth in jobs.
And you mentioned the dot plot. So at the end of the two-day meeting on Wednesday, not only do we get the rate announcement as well as the press conference with Jay Powell, but we get economic projections as well, and we'll be watching closely. Another thing that you just mentioned, Tai, is Donald Trump. So we can't forget the fact that it is a U.S. presidential election year. The countdown is on until that November 5th date. And another Trump assassination attempt this weekend in Florida. So what do you make of what happened, and what does that tell you about the kind of environment we're in right now?
So I'm glad to see the Secret Service really did their job this time. He was golfing on the 5th hole, and they advanced to the 6th hole, and someone in the Secret Service saw the gun come through the fence, confronted the person who tried to confront the person, fired shots, and they were eventually able to capture him. And he seems like someone who's been in trouble with the law, extremely anti-Trump, and there's a little less shock because it was less obvious. Trump wasn't at a rally, he wasn't shot, and there wasn't blood, on him, and the Secret Service didn't have to tackle him, at least not on camera. But it tells you that we're in and the markets, the second time around, there's plenty of coverage, but it's a lot less than it was the first time. I think the market's a little complacent about this, particularly as you mentioned earlier in our conversation that reports are that the Iranians are after him for some of the one of the targeted hits that took place on when the top Iranian soldier who had a submarine general who was responsible allegedly for a lot of American service deaths over time. So I think the market isn't really appreciating that if there is a successful assassination attempt, what that is going to do to the markets, what that's going to do to this country. And we're like that. We won't feel it until we're confronted with, but I'd expect that stocks would be down dramatically, immediately or on the open afterwards if something were to happen to him, something very serious would happen to him, and bonds would be very, very, very well bid. But it's an issue, and this is the second time. And you do worry about copycats. Was he a copycat? Was he encouraged by the rhetoric? Is there going to be a third attempt? I would like to think that they're really beefing up the protection as much as possible.
And as we edge closer to the election day, I'm sure we'll learn more about this attempt and what actually went down. But as you mentioned, the markets in terms of reaction, this weekend I was paying close attention to futures prices after that breaking news yesterday, as well as watching the crypto market. Now, that's something that we discussed when it came to the first assassination attempt in Butler, Pennsylvania early this year, that we were keeping an eye on crypto because that is a 24-hour market. But I think this is a good time to take a look at where U.S. equity prices are this morning, especially given that move higher at the end of last week. So we have to keep in mind as we head into this week, not only do we have the Fed Reserve meeting, but we also have plenty of economic data, retail sales, housing, and at the end of the week, we have the S&P 500, S&P index rebalancing, quadruple witching as well. So a lot to keep our eyes on this week.
Absolutely.
So in New York morning trade, we are seeing the Dow Jones Industrial Average higher on the session. It is up triple digits. Earlier, it was as high as 300 points. But when we look at the NASDAQ and the S&P 500, we are seeing red, with the NASDAQ down by nearly 1% on the session, and the S&P 500 down by 0.2% as well. It's interesting, Tai, you and I were talking about how we're seeing Apple down significantly in New York morning trade, down by over 3% on the session.
Yeah, that was certainly an eye-opener, and you said, oh, what happened to Apple? So as it turns out, the reports came out just before the open that said, several reports that said the opening weekend, and you feel like you're at a movie theater, right? It's the opening weekend. The opening weekend of iPhone 16 orders apparently was some 13% below what the iPhone 15 achieved last year. They only sold 13.5 million units or something like that. I forget exactly the units. But Apple functionally is maybe it was 37 million units actually. Apple is functionally a phone company. Half of their revenues are directly from the iPhone. So if this iPhone is a little weak, even though it's supposed to have a lot of AI capacity that's getting slowly rolled out. That's going to matter. That's going to hit. Apple's had a great run. That's going to hit Apple's top line, and I think that's why the market's pushing it down now. We'll see what happens by the end of the day, the end of the week, but certainly that's why Apple's down so much in the early going here today.
And indeed, this down move by Apple is significant as we look at the other laggards in today's session. We're also seeing Boeing down as well, down by 1%, and that's one company that we focused on last week. What do you think will happen to them, not just in the short term, but long term?
I think longer term, they have sort of protection in that there's two major airplane makers in the world, Airbus and Boeing. So Boeing will probably not go under. They would get, if they were to get deeply into trouble, I think they would get, quasi or government support, because you can't have one plane maker, and it's a major American plane maker. So I think there's probably a floor under the stock. I have no idea where it'll be. I mentioned that if we got anywhere near down to 120, I think that might be a good buying opportunity. But in terms of the strike, the rating agencies are saying they don't really, with 2 weeks, 3 weeks might be okay, but if it goes any longer, they're probably going to have to downgrade the stock. And Boeing right now is BBB-, so they're one notch above, they're just above junk. And if they go to junk status, there may be some firms who can't hold anything that's junk in terms of certainly fixed income that might have to sell some Boeing bonds. It would also raise their borrowing costs. Estimates talk about maybe $100 million a year in just pure borrowing costs if they get downgraded junk. For somebody like Boeing, that's not a lot, but it doesn't help. But what I think is really important is how fast this new CEO, Kelly Ortberg, can get this sorted out. There's been a lot of bad blood over the past decade and a half at Boeing, and though it wasn't his fault, it's coming to roost at the beginning of his watch. So won't be easy. Can he give in? Does he want to give in the 4 years and 40%? I'd like to think not, but he's probably going to have to move towards the unions or throw them something where they'll be willing to come back and onto the assembly line. But it's a 30,000 people. It's a big deal because you could see how this really opens up Boeing suppliers. They've told suppliers now that please no longer send us supplies because if we have enough, because we don't want to pay for it. We're trying to hold on to our cash reserves as long as we can. So could have ripple effects among Boeing supplies as well. So we'll keep an eye on Boeing for a while.
And I think you bring up a lot of key points there, especially given that its other competitor is Airbus. And with something like this, there are so many moving parts. And I'm sure we'll be talking about this as we head into the rest of this week, despite all the other events that are taking place, Tai. So very quickly, I do want to move on to market action that we're seeing in other areas, including the currency markets as well as commodities. So let's take a look at the major currency pairs this morning. What are we seeing right now when it comes to the Japanese yen?
So dollar yen and the yen carry trade, we watch consistently. There's an issue where it's the first time since July 2023, so over a year, when dollar yen is traded below 140. It dipped into 139.58, I think was the low, and has rallied back up. But the trend still seems to be toward yen strength. And the dollar index overall, dollar index is near its lows. So a lot of this will depend on what the Fed does. If the Fed only does 25, I think you'll see a sharp reversal, probably in stocks, absolutely in bonds, because I think the bond market's gotten a little bit over its skis. Two-year yields are 350, about 356 or thereabouts. I mean, Fed funds rates are still 5.25 to 550. Are we going to get an average of 200 basis points of cuts in a year's time? Seems a little high. So I think I think the dollar will rally, the bonds will drop sharply if the Fed only does 25, because now expectations will move so dramatically in the last 48 trading hours. So and Europe has its own issues. I think euro is around the 110 region, not terribly exciting, but people are really watching dollar yen.
And moving on to what we're seeing in commodities. So crude oil and Brent have recovered key levels. Crude oil back above, right at the 70 level in New York morning trade. So what can we expect to see this week for crude?
So crude sentiment was very, very negative. It turned around last week. I suspect that we'll get a continuation of last week's move. Perhaps not as sharp, a little bit more sideways, but with a bias toward the upside. I think the market, the speculating market, is still a little bit short and leaves it a little vulnerable to a squeeze. And it didn't get a lot of notice, but the Houthis also shot a missile into central Israel. The Israelis were able to damage it and bring it down, so it didn't hit what it was supposed to hit. But there are concerns where if that part of the world heats up very quickly, that's going to impact oil that's the first place you will see it. In terms of the other commodities, gold had a spectacular week. New historic highs. It's pushing toward. Looks like it's a matter of time before 2,600 and beyond. Silver has followed very well up in the 30s, near 31, and even the PGMs, platinum and palladium, continued. Palladium regained 1,000 and. Platinum regained the 1,000 level, and palladium retains its strength from last week. So we'll see how that goes. I would also mention that base metals, the entire complex, is up quite strongly. Copper at 1 month highs. On the LME, it's trading $9,450 per ton, and helping to pull up the rest of the complex. So commodities seem to be doing solidly so far, and base metal especially, because the news out of China continues to be sort of a little weak, where President Xi had a speech where he said, we are going to, and this is how much people parse what President Xi says, they said we should strive to hit our growth targets. And they said he's backing off a little bit, because the last time he had a speech he said we should resolutely hit our trading targets. So strive is try hard, but not as important as resolutely. So it looks like China might be looking at happy with sort of somewhere a growth rate maybe 4.6, 4.7%. So the news isn't great out of China, but it's still as yet a good day for the base metals complex.
Well, Tai, I think this is a good time to take a look at some of the effects of the growth story as well as geopolitics, especially when it comes to some of the commodities that you just named here. So when we're talking about what's happening in the Middle East or even other regions of the world in terms of geopolitics and slowing demand, we know that it tends to hit commodities. So can you elaborate and walk us through some of the implications here?
And so commodities, China has been a big driver. I mean, I traded base metals for over 10 years. They literally use 50% of the entire world's output. So they are really the one. They used to say that in terms of the United States and emerging markets, if the United States has a cold, the rest of the world has pneumonia. It's similar to a lot of commodities, where if China gets a little shaky, then the rest of the world in terms of commodities, really gets the shivers, because they're such a big user, and they're the marginal user in almost everything. But they've stocked up a lot of commodity. They've stocked up energy. They've stocked up food. In fact, there's some concerns that China is going to be buying fewer agricultural products because their storehouses are full. Now, why? Is it just a concern of that they want to be ready for anything? Is it stocking up in case there's conflict erupts in the Taiwan Strait, whatever it might be? But agricultural, there are some concerns that agricultural products could drop a little because China won't be buying as much because they're such a big consumer. In terms of geopolitics, the palladium jumped substantially last week, and I actually put Renaissance and palladium in the same sentence, because the Russians said we may not want to export some materials to people who are not friendly to us, but we don't really want to hurt us. On the margin, things like nickel and palladium have been produced in Russia, and they're still a big energy producer, although they just can't sell it directly to the West. They sell it through China. They sell it sometimes to be honest, I think there's a lot of winking where the U.S. will allow that oil to flow, particularly a couple of years ago when gasoline prices were very, very high, that the administration didn't want prices to be high, especially in front of the 2022 election, so they let oil into the market, and they're still doing it quietly, let Russian oil into the market, just the Russians can't sell it for $70 a barrel or $75 a barrel. They probably have to sell it for $55 a barrel. But that's the revenue that they need. So there's a lot of commodities have always been susceptible to geopolitics, will continue to be that way for the foreseeable future because people need this, particularly energy.
Okay, Tai, well, we are fast approaching the end of our segment, so I do want to do a quick market check at the moment. So let's take a look at the major U.S. stock averages this morning. So earlier in today's session, we did see the Dow up triple digits in terms of the advance. It is still up by over 100 points, or a quarter of a percentage point, but we did see gains up above 300 points right after the market opened. Meanwhile, looking at the NASDAQ Composite Index, although it did see weekly gains last week, it is lower on the session, off by triple digits as well, off by 130 points or 0.7%. And the S&P 500 in New York morning trade, let's see where it's trading now. It is nearly flat on the session. So, Tai, as we head into tomorrow's session, we will be getting retail sales data. I'm sure you and I will be talking about that tomorrow. An interesting statistics, apparently Thanksgiving is later on this year, so there are only 27 days between Thanksgiving and Christmas this year. So a lot of retailers stocking up and getting ready for that holiday shopping season.
Absolutely. The holiday shopping season is probably 50% of the volume and a big chunk of the profit margin. So that's you're exactly right. And there are stories out that some retailers are already getting ready for it. The stock markets had 5 straight up days. It wouldn't surprise me if it did it again, but we'll see. The market will adjust itself ahead of the meeting. But retail sales will be the last piece of data that the Fed sees before they make this decision.
Well, we did get that strong number in July, so we'll see how consumers shopped in the latest month. Well, thank you so much, Tai, for joining me. That was Tai Wong, proprietary trader, for an extensive look at the markets. Coming up, joining us on Global Money Talk is visiting Professor Na Marie of Yonsei University. We'll be right back.